trading boom and crash capitalizer series. We are now on episode 3 of the series, and we will be discussing higher time frame analysis. Before we continue, let's do a quick recap. We discussed all the price action tools from the last section, tools that you can use to find entries and exits. Examples of these tools: we managed to identify the order block, the propulsion block, the fair value gap, the liquidity voids, the mitigation block, right? We dove deep into how you can mix or you can utilize all these concepts or theories, right? So today we are going to do something that's very, very vital for your trading career. We'll be tackling higher time frame analysis. So higher time frame analysis is just one of those pocket utilities that you need to have everywhere you go or every time you are in the marketplace. So you need to spend a lot of time on the higher time frame and become a trading wizard. So this lesson is important because boom and crash, which we are focusing on, is an almost trending market, and that means it's easy to trade. It's easy to identify market reversals and rejections if you are on the higher time frame. So what exactly do we mean when we talk about the higher time frame? So a higher time frame analysis basically is the use of monthly, weekly, daily, 4-hour and 1 hour to establish a longer term trend, right? The use of higher time frames is used to determine the overall market direction and execute trades on a lower time frame. Also, you need to make sure that you trade in the direction of the overall trend, which comes from the higher time frame analysis, and this increases your chances of profitable trades. With that said, long and short of this is that being aware of higher trend of securities, it brings sanity, and sanity means accuracy, right? So let's now dive into what we'll be focusing on tonight when we talk about higher time frame analysis. So when we talk about the higher time frame analysis, this is what we are going to be focusing on. Firstly, we'll look at old highs and old lows and why it's important to identify those. We'll be focusing mainly on the daily time frame. We'll be looking at trending markets. We'll be looking at ways of identify or how to identify a market that is trending, and we'll also be looking at consolidating markets. So when you talk about consolidating markets, we mean markets that are anti-trending, right? That are not trending. We'll dive deep into what I mean when I say that, and then finally we'll be putting it all together. That means that we'll be studying trends of all the boom and crash instruments. Now let's tackle the first item on our list, which is the old highs and old lows. So the main question is, why do we identify old highs and lows, right? So this is the reason why we do that. Above old highs resides liquidity, and when we talk about liquidity in this series, we are talking about orders. And when you talk about orders, this involves pending orders from buy limits, sell stops, or just orders that have been executed are stop loss orders. And the same thing for old lows. Under old lows, we are going to find liquidity in the form of orders, pending orders, and stop loss orders. So with that said, old highs and lows can be used mainly for three purposes. First one is we can use them for buyers, entries, and exits, right? So let's get technical and identify old highs and old lows in the boom and crash and boom 300 index. So when we look at the far left of the chart, we have an old low here that was formed on July 2022. This was last year, and we had this old low. We had the market coming down and taking out this old low. We had another old low here, and the market drove down to take out this old low, and the market continued. We had another old low here, and the market drove down to take out this old low, and then we formed a new one, and the market drove down to take out this low, right? So I want you to keep the theory in mind that we had discussed earlier about what resides below this old lows. Imagine you are in the marketplace, right? And in this case, let's imagine we had buys in this area or in this level here on this day. This is a 24-hour chart. So let's imagine we had our buys on this daily candle. Obviously, we are going to place our stop losses below this low here, and then the market drove up. That means we were in profits. Now let's imagine a case where we did not close this position. We are hoping for higher prices. So what the market does is the market is going to drive or rally down into this old low in theory that there are orders residing below this old low. So they're going to do that with some heavy movement, and then they continue on the upside. So that's a way to look at it. Or imagine you are on the market, you are driving the market to the downside, and you are the market, and you are trying to take out everyone else who had their orders placed here, right? So obviously, if it's a situation where below this old low resides our orders, what we are going to do is we would want to tap into this old low and run them over, right? So let's imagine now we want to take out orders that are, let's imagine people who have buy limits put under this low. So what we're going to do is we are going to execute their buy limits, and then we take them up into profit, and then we continue to run them over. So that's another way of looking at it. But enough with the theory. Now let's look at the old highs. So we had an old high that hasn't been tackled even up to today from July. Then we had another old high here. If you look closely, you'll realize that we had an old high here, and they tapped into it before dropping down. And then we had another one here. They did tap into it before going down. It's just that on this market here, boom 300 was bearish. So let's try to look at a different chart and identify recent old highs and old lows. So this is the same instrument, boom 300. We had an old high here. The market came and took out this old high, and they dropped. When they dropped into an old low. They took out an old low, but before they took out an old low, an old low, they came down, and then we had an old high here. They tapped into that old high and dropped to the downside, right? And then they came back up to retest some level. I guess from our recent lesson or our previous lesson, you are able to identify what level they came up to. If you did not watch the lesson, you better go watch it now so that you have an idea of why they would take out this low here, this previous low, and still return to the upside and continue on the downside, right? So we did address that. So when the market took out the downside, they went to this level and then continued down, and then they formed this old high here. And when what they did is, at a later time, they came and they ran over this old high and continued on the downside. So this candle here is today's candle. So currently we are bearish on boom 300, so I'm guessing they are going to the downside here. So let's look at it. We have crash 1000 here. So what on crash 1000, we are going to look at old highs and old lows. So we had an old high here, it was ran over. This was in October last year, and then they ran over this old highs and ran to the, or dropped to the downside to take out this old lows, and then they retested some level. I think if I look at this, I see a breaker block. If you don't know what a breaker block is, go watch episode 2, and they continue to drop on the downside. Then when they took out this old low, they found support on some level here. I'm seeing the top of the fair value gap, which is this one. So that means that they found resistance on this top of the fair value gap and continued on the downside, right? They formed an old low, and then when they continued to go up and still found support on the old fair value gap. They found resistance on the old fair value gap and dropped to the downside to take out these previous lows. And then we had a new low being formed. They went up, they took out this old high and still found support on the fair value gap. But this time around, we had this order block here, this bearish order block here, which was tested, and they continued on the downside, right? We had this old low, ran over, old low, ran over, old high, ran over, and they found support on some level here. They dropped on the downside, right? And then we had this old low here. They did tap into it. It was a small purge, but it wasn't a big movement. We still consider that running an old low. So they did that, and they went to the upside, found resistance here, dropped, and continued to the upside, took out this old high. And currently we are looking, this is C1000 on the daily. So this is the current market condition. So if I were to predict where C1000 is headed to right now, we might continue dropping for the next few days until we find support on this old order block. So I don't know. If I was you, I'll take that and study C1000 right now. So let's dive into C500, right? C500, we have a beautiful chart right now. This was an old high. It was ran over. This is a July until, there's a July up to January chart. So they took out an old high on August, on July, and then they came to retest this same level, and then they formed a new high here, and they took it out, formed another high, or multiple highs, took them out, went to the upside, formed another one, took them out, right? And then the market reversed here. So when they reversed, now our eyes turn into old lows, right? So we turn to the old lows. We have this 1, 2, 3, 4, 5, 6 old lows. So the market has been dropping since November, or since October on C500, taking out our 7 or our 6 previously identified lows, and that's what's been happening. So this is just one of those that's one of the reasons why we look to old highs and old lows, so that we are able to depict bias or where the market is likely to go to next, right? So that's enough about old lows. We'll get back to it at a later time. So now we are going to dive into trending markets, right? So what are trending markets? A trending market is when a price series continually closes either high or lower, higher or lower over a number of periods, right? So a trending market is one in which price is generally moving in one direction, and trends are usually noted by higher highs and higher lows in an uptrend. So this information was harvested from Investopedia and Baby Peps. So the trend is your friend. That's our daily bread here in capital trading, and we look for trades in trendy markets because low risk trades are trades that flow with the trend, right? So that's how we would put it. Now let's dive into the technical aspect of trending markets. So on the chart, we have Crash 500 daily chart, right? So if you look at this chart, you'll realize that C500 since 2022 has been dropping. So this is a trendy market. We would want to trade a market instrument that's trending to the downside because it gives us low risk entries, and we do not find ourselves in a situation where we trade markets that are going to run us over or that are not in the direction in a higher time frame trend, right? So let's identify another instrument that's trending or that's been trending. So we have Boom 1000 on the 24-hour chart. So Boom 1002 has been trending since October last year. So it's been going to the downside. So this is just one of the reasons why we consider Boom 1000 or Boom 1000 as just one of those good instruments that you can utilize or you could focus on as a boom and crash trader. Now let's jump to a different chart. We have Crash 500. Crash 500 on July this was July 2022. So Crash 500 has been trending on the upside. So it's always best to look for buys if you were in this marketplace, right? So if you would identify the trend, then it will be best to trade with the trend. Now let's look at Boom 1000. This was in between 2021 and 2022. So on 2021 up to January 2022, Boom 1000 has been dropping, right? This was the trend, and then for some reason we had a market reversal. So when the market reversed, now the trend direction changed, and from 2022 January until March, the market was trending on the upside. So it was best to trade to go for longs or trade or buy Boom 1000 on this day, and then on these days, right? And then from March, mid-March until April, Boom 1000 started dropping. Boom 1000 reversed. I'm guessing after they took out this old highs or after they took out this old low, they found resistance on some level and they dropped to the downside, right? And then they took out this old low, they didn't tap into this one, right? Then they found some reversal here and went to the upside. So it's always best to identify your market environment so that you know if the instrument that you are trading is trending on the long term or not. So that's it for now with trending markets. Now let's identify consolidating markets. So when we talk about consolidating markets, this is what we mean. So consolidation is a phase when a stock or an index trades within a range, right? So you should be able to identify this market conditions as soon as possible, and it's always ideal to stay away from these markets or this market. The trend is said to be sideways, right? And it may vary depending on the circumstance. Once this range is broken, it may lead to bigger moves, but until the range is intact, the movement cannot be clearly predicted. I think that's enough to justify why we stay away from this market conditions until the movement has, or they've broken out of the range. Right now, let's identify a few of the consolidating markets and boom and crash. On the chart, what you're seeing is boom 300, and this chart was recorded on October 2022 and current market condition, right? So boom 300 currently has been in a range, but I think they broke out of this range a few days ago. This was beginning of March. So they've been trending in a or let's not use the word trending. They've been ranging in or they've been moving sideways, right? They've been moving sideways in a range. So that's what I've been meaning to say. So it's always you can find yourself hitting stops, or you can find yourself losing money when you try to trade this market conditions. So it's always ideal that you'd rather wait for them to break out of this range, and then when they come to retest on some level, that's when we can predict where the market might head to next, right? And then let's jump into a different chart. This is boom 500. So boom 500 has been trending. This was August 2022 up to December 2022, right? So they've been in a range, they've been ranging. So it doesn't necessarily mean that we can't find setups in this market condition. We can do that. We do that. It's just that it's not highly favorable for trading market conditions that are in a consolidation. So let's jump into boom 500, another chart. Boom 500 has been ranging. This chart was recorded from October up to March. So they've been ranging here. So they've been stuck in a range. So what we would want to do is, what you would want them to break out of this range, and then that's when we can predict where they might head to next, right? So let's put it all together. But when we talk about putting it all together, we're just saying we want to study trending and consolidating markets. We are going to identify old highs and old lows that were broken, and then this identification is going to occur, or we are going to utilize all of these instruments from boom 300, 500, 1000, and crash 300, 500, and crash 1000, but utilizing the line chart, right? So let's jump into that. This is boom 300. From our source of this chart, boom 300, we stand to be corrected, was formed in May 2021. So this chart is we started this chart from May 2021 until current market condition. So we want you to study this chart, look at it, how they've been performing, identify trends, identify consolidations, and identify old highs, identify old lows, and just study, utilize the information that we just gave to you in the past minutes. So if you look at this chart, you'll realize that when boom 300 was introduced in 2021, they were ranging in a consolidation, right? There's a daily chart, there's a daily line chart. So what they did is, when they were ranging, they were forming old lows. If you look at this two lows, we would identify this as our old low and our point of liquidity. They ran them over in 2021 November. They came back up to retest these old lows and dropped, and they ranged here. They formed these two highs. They came to run them over too, after running over this old low, right? And then we had this old highs from when boom 300 was formed. They came, they but they rallied over this old highs. They took out the liquidity on the old highs, and then when they did that, we had the swing low here being formed, right? So when they reversed, our eyes go straight to this old low. They did that, they came to this old low and ran over this level here, and then came to retest. So when they go up to retest some level, our eyes now turn to this level here. They drop down to run over this low, and they've been going down since, right? So first things first, you need to know the higher time frame, or what the overall trend is. Boom 300 has been bearish, or it's been going down, so our trend is confirmed. We are going short on boom 300, right? So it's always ideal to look for sell setups on boom 300, because on the longer term they've been dropping, right? But if you look at this period from November 2022 up to February 2022, you'll realize that they've been stuck in a range. So this is consolidation. So they've been consolidating. If you remember, we brought up the chart, the candlestick chart, for this period a few minutes ago, right? So would rather want them to break out of this consolidation, which they did here, and then we will want to predict where is their next move, right? So that's how would analyze boom 300. Now let's jump into crash 300. So from our research, crash 300 was introduced on July 2021. So this chart is from July 2021 until current market condition, right? So look at the overall trend of crash 300. They've been going up and then mid 2022 they reversed. Now they've been dropping, but current market condition is that they're kind of bullish. So that's just the overall, this is the overall direction of crash 300. So what you should do, you should be doing right now is you should be looking at old highs, and how the market has been running them over. You look at old lows, how the market has run them over. So that means that if you are looking at the current market condition, you would identify this old high, then identify this old high, identify this old high, and this old high, and you would want them to go to the upside and run them over, right? So that would be an ideal condition for us, right? So this is a tip on how you could determine bias. So now let's jump into another boom instrument, which is the boom index, which is the boom 500. So for boom 500, from our research, it was formed July 2020, right? So it's been dropping since July 2020. It's been dropping. It's heavily bearish. So that's the overall trend of boom 500. So it'd be ideal to trade boom 500 by looking for shorts or by looking for sell setups. So with that said, let's identify old lows. They were ran over because it's easy to identify old lows that were ran over because the overall trend is bearish, right? So what we do now is, for study purposes, if we wanted to go long here, what we'll do is we would identify swing highs like this high over here. So the market will run over this high and then it retests some, let's assume this is some resistance level. They took out this point of liquidity and drove to the downside. Immediately they drive to the downside, they take out old lows, and then they come back up to retest to some level. Then they run to the downside, take out an old low, then they go up, then they retest some level, then take it to the downside. So notice something here. Almost every time the market runs over an old low, they come back for a retest, right? So what we do is we would want to put ourselves in a situation where we would anticipate the market to come back up after taking out an old low. We would want them to come back up to some level, and then we look for shorts on that, right? So, but how do we look for shorts in this instrument? Remember yesterday we tackled price action tools. We'll utilize some of those instruments and more stuff that you are going to learn on our next episode, which is going to be lower time frame, or just instruments that you can utilize to look for exits and entries in the marketplace. So what they did here is we had these two highs, they ran them over and then found support or found resistance on some level here. Then they continued on the downside, took out this highs, 1 2 3 highs, they ran them over, then came back up to some level, then continued on the downside, right? So it's more or less the same thing here. That's what they've been doing. So this is how we would study a boom 500 24-hour chart. So would like you to do the same thing after watching this series. Go open up the boom 500 chart, identify old highs, identify old lows, identify trending markets, identify consolidations like these ones, identify consolidations like these ones too. So just do that. You stand you a better chance of winning in the marketplace when you are aware of the higher time frame trend of an instrument, right? Now I'm going to jump to Crash 500. So this is the Crash 500 chart. So Crash 500 was in the inception of Crash 500, according to our research, was March 2020. So Crash 500 has been dropping, but it wasn't as clean as Boom 500. Crash 500 would take out old lows and go to the upside, take out the old highs from July 2020 and drop to the downside. So they've been doing that. After taking out old highs, they would go to the downside and then take out an old low and retest, then go to the downside. So currently we had the market taking out an old low from July, and then they went up to retest some level, and now they've been dropping this whole year, or this since February, or since February. So that's what's been happening with Crash 500. So it's the same thing as Boom 500. Identify your higher time frame chart, open the daily chart and just analyze, identify trending markets, identify consolidation, identify old highs, identify old lows, right? So we now jump into Crash 1000. So our conclusion is Crash 1000 is just one of those markets that are liquid. When we say it's liquid, we are saying it's clean and it's trending. It's been trending since 2020. You can tell from the line chart here. So it's always ideal to look for sell setups or sell trades on this market here. So what they did is we have this old high that has never been taken out, and this was formed in December 2021, and they've been dropping ever since. And the lowest low ever formed in Crash 1000 was formed a few days ago, probably a month ago, and this is the low. And currently what happened is, after taking out this low from January, they went up to retest some level here. Then what we are seeing currently on Crash 1000 is they are dropping, or they're still in a range, right? So this is how we would analyze Crash 1000. And then we have Boom 1000. So Boom 1000, for Boom 1000, we wouldn't want to say it is a trending market, right? But it's not as clean as Crash 1000. Boom 1000 since April 2020, not since April 2020, but from April 2020 up to October, they went up, right? If you remember, we put up a chart showing the trend for Boom 1000. They went up, they went down, they ranged to the upside, then they went up. This was a good example, or a good scenario of a trending market. So it would have been ideal if you were trading this market to look for longs when it's like this. And then they found reversal on some level, then they dropped, came back to retest this something here, then they dropped to the downside. Then they formed this 1, 2, 3, 4 old lows, and remembered them at a later time and took them out, and took out this low from these two lows from 2021 with the movement for the past 3 months, right? So that's what's been happening with Boom 1000. So same thing, go identify trending consolidation, go identify old highs being taken out and old lows being taken out. So with that, ladies and gentlemen, concludes our session for tonight. But before we finish, tomorrow will be our final episode, so we'll be looking at lower time frame analysis. Now this is the juiciest of all the episodes, because what we'll be doing now is we'll be looking at ways to look for entries, and we'll be looking for ways to look for exits, utilizing liquidity. When you talk of liquidity, we have already educated on liquidity on our Instagram page, capital trading _BW, and we will be tackling ways of trading spikes, which seems scary, and identifying ways of trading drops, right? So that's what we'll be doing tomorrow, so make sure to attend the session. That'll be all from us. Thank you.